right. Oh, live. Oh, I forgot to turn down the volume. Rookie mistake again. How you guys doing today? Hello, you magnificent Melonheads. I hope everything is well with you guys. All right, folks. It is Friday afternoon, my favorite time of the week. My Friday afternoon live stream when we wrap up the week. And, well, it's been a pretty awful week, hasn't it? Hasn't it just been awful? Obviously, a lot going on in the world. Now, look, we're going to get a little doom and gloomy here, a little fuddy. I know what you're thinking. There goes Jack again. He's the perma bear. He's always with his economic FUD. And all right, that's a fair criticism. All right, I'll take that one. I take that one. I'll wear it right here, because I'm known to do that from time to time. I'm known to get a little fuddy. All right, I've been playing this tune for a while, and I'm not always right about it. But I see a lot going on. I see a lot of inflation, which I was right about the inflation, wasn't I? And I also see a lot of geopolitical situations, which, well, I was right about the geopolitical situation, wasn't I? And I see these things coming together and possibly coalescing. And I see a lot of other situations geopolitically and macroeconomically that could combine with these pre-existing crises, we'll call them, that could form a perfect storm of stagflation. All right. And I don't think the world has ever seen anything like this, at least certainly not in recent history, not in the last century or so. All right. So I've been taking a couple of notes. I've been trying to piece together this stream and how I was going to do this. And, I've got a pretty good idea in my head, but if I start stuttering or, you see my eyes twitching, that means my mouth can't keep up with what's going on in my melon. And that's saying something because, in the words of the great Jackie Gleason, I got a big mouth. All right. So if my mouth can't keep up with my melon, there's a lot going on up here. I threw that in there for my dad, by the way. He's a big Honeymooners fan. Hi, Dad. Hi, Mom. I love you guys. Thank you for watching. They always watch my live streams. All right. So I also want to say hello to everybody in the Super Chats, all my good friends that tune in every week at this time, along with a couple of new faces. I see Cole Marsh, my Edgar Allan Poe macabre companion. Hello, Tom Stencil, the first of my Patreon supporters. Thank you, Tom. Welcome. Bovine Scatology, Daryl Wood, Barb G. There's Mike Binder. There's CS, my Bitcoin-hating Melonhead friend. Hello, everybody. How are you guys doing? Renaissance Novice. All the regulars are in attendance. And Mr. D, hello. All right. So, first of all, let's talk a little bit about what happened yesterday, okay? Because I did my live stream yesterday morning, shortly after the war had started, and I mentioned I wasn't going to do any trading yesterday. That when you get big moves like that and when the algorithms get involved, that I wanted nothing to do with that noise, so I stayed out of it. And if you saw that huge, massive swing and reversal yesterday, well, that was the right call, wasn't it? I didn't want to FOMO in. I didn't want to chase. I said my trades had been made. All right, maybe I should have taken some profits yesterday, but you know what? I think the macroeconomic trends that I'm investing right now are still intact, so I'm going to keep doing that. But number one, we saw a big price smash at market open in precious metals. Okay, the bullion banks defended their short position yesterday, big time. There was over 1 billion ounces of silver were traded yesterday. Keep in mind, that's combined trading. That doesn't mean somebody dumped 1 billion paper ounces all at once. But there was a lot of volume yesterday, a lot of volume in silver. So the shorts did not go quietly into the night. They defended their short position, and it held, and silver came back down below its 200-day moving average. And I mentioned on my live stream yesterday that I was not going to FOMO into silver until I saw a break above that 200 line and a successful back test and then a move higher. Well, we failed that back test, and that's why I didn't go chasing yesterday when silver was over $25. I wanted to see that back test, and that back test failed. All right. Now, what happened? Well, we had the President Biden made his speech about these expanded economic sanctions against Russia, and those sanctions did not include removing Russia from the SWIFT system. The SWIFT system is basically the international banking system for settlement of transactions. Okay, it's It was kicking Russia out of the banking club, simply put. All right. I'm sure somebody who's more educated in finance could give you a more eloquent explanation of that. It's kicking Russia out of the club. All right. It's forbidding any banks in the West from doing business with Russia. Well, they didn't do that. All right. And boy, I could talk about that for hours because my blood was boiling when they didn't do that. Okay. Yes, kicking Russia out of the SWIFT system would hurt our economy tremendously. It would hurt Europe's economy tremendously. It would spike energy prices, but it would also hurt Russia's economy tremendously. All right. Yes, Russia would probably start taking payment in gold or in Bitcoin or whatever, and they'd start selling it to China. But being kicked out of the international banking system will wreak absolute havoc on the Russian economy. And that is the last single non-violent means of opposition that the West has to deter any escalation in this conflict. All right, it's the last thing. If we're taking that off the table and there is going to be nothing to check that westward expansion, then that means violent conflict becomes more likely. All right, so I was so upset yesterday that we did not kick Russia out of the SWIFT system because, in my opinion, and hey, some people differ in their opinion and you're welcome to it, but in my opinion, that made the likelihood that we end up in military conflict much more likely. And I don't want to go to war. I don't want to pick up a gun and start shooting at people. I'm actually pretty much a pacifist, right? I got a big mouth and a hot temper, but I don't want to kill people. I'm pretty sure most people don't want to do that. You know what I want to do? I want to make money. I want to do my investments, all right? I want to build out my house. I want to build a good security and good freedom for my girls. I don't want to get involved in this garbage. And I'm pretty sure most people don't want to, all right? But yesterday, Western leaders chose the status quo. They chose their asset bubble over deterring violent conflict, okay? So we all came closer to bloodshed because the wealthy elites in the West didn't want to rock their boat because they're getting rich. That's my interpretation of what I saw yesterday, okay? And that's why as soon as that speech was made and it became clear that Russia wasn't getting kicked out of the SWIFT system, markets just went up, up, and away and closed green for the day. Let that sink in, all right? Gold and silver closed negative for the day. Oil closed negative for the day. And stocks were risk on a day when war in Europe broke out. That is the madness of the world we are living in right now. And it is madness, folks, that we are, as a civilization, we are going mad, okay? Somebody needs to snap out of it and fast because that was absolute lunacy yesterday. It was greed. It was weakness. It was aggression. It was every despicable human quality imaginable was on display yesterday, and I could not believe what I was seeing. Okay, so that's what happened yesterday, and that's why we got this big rally in stocks, and that's why all the commodity prices came back down. That's why gold and silver sold off. All right, it was madness. All right, and now we're going to shrink my big fat melon of a head because I want to show you that the madness is continuing as we speak. Here we are. The S&P 500 is up 2%. All right, folks, we're looking at street level fighting, house to house, door to door fighting in a modern metropolitan area in Kyiv between a global superpower and a civilian population of millions, and the hell on earth that represents. And the Dow is up 820 points. This is insanity. All right, this is it's insanity. All right, this is what going mad feels like. I feel like the only person in the room, and I know I'm not the only person in the room who's thinking this. I'm pretty sure most of you are thinking the same thing. This world doesn't make any sense to me. Okay, this doesn't. Something here does not smell right. The Nasdaq up 1.4%. All right. All right, moving on. Oil is down. How is oil down? How is oil down as war breaks out? War is incredibly destructive. All right, and yet oil is down. Okay, so today I didn't touch any trades yesterday, but today I added to my position in ERX, and I added to my position in the corn ETF because I believe that these corrections in commodities are not grounded in reality, and I believe that the winds of public opinion will force our leaders to reverse this decision. All right? I think it's inevitable. And if you spend some time on Twitter, for 2 days now, Swift has been trending. And what do you see when you look on Swift right now, or on trends in Twitter? Is you've got like Antifa types. You've got your far lefty types. And at the same time, you've got your trucker types and your Tea Party types, right? And all of them are screaming, kick Russia out of Swift. All of them at the same time. All right. So public opinion is almost universally in favor of kicking Russia out of SWIFT. I think it's inevitable. It's going to happen. All right? And when that happens, oh boy, watch those commodities. Oh boy, it will be right back to where we were yesterday morning. Real quick, I got a call out in the super chat. Thank you, Mike Binder, sir, for your super chat and your support of the channel. War is good for business. You just need to find a good narrative to sell it on both sides. Mike, that is exactly what they did. Both sides sold it in their own way. I do think both sides wanted this conflict. I really do, and I think they all benefit from them. The banks are benefiting. So, yeah, I'm 100% there with you. And again, sir, thank you for your continued support of the channel. And Dumb Money Media, sir, thank you for your support of the channel, also for your service to our country. Thank you, Mike. Thank you, Dumb Money Media. And he says, after my 9.5-month deployment in Afghaniland, I've never heard it called Afghaniland before. You make it sound so fun. Is there a Ferris wheel in Afghaniland? I'm in no rush to be thrown into another mandatory vacation overseas. Dumb Money Media, I pray that does not happen, sir, very much. Once is too many in any man's lifetime, so I hope it doesn't come to that. And once again, thank you for your service. Thank you for standing on the wall, sir. Okay. Now with that, I learned yesterday I was kind of shaking my fist at Germany because it appeared, or at least President Biden said in his press conference, that Germany and Italy were the reason why Russia wasn't kicked out of the SWIFT system. Well, turns out that was a lie, because here's this article in the Wall Street Journal today. Talks about U.S. allies roll out fresh sanctions on Russia amid debate on how hard to hit. Well, it says right down here in this article that President Biden joined other allies, including Germany and Italy, in ruling out the move, at least for now. So it was President Biden, not just Germany and Italy, it was President Biden also, who were opposed to kicking Russia out of the SWIFT system. Why? Maybe because higher gas prices is bad for business going into a midterm election. Maybe that was partisan politics prevailing over doing what is right, over taking steps that are really the last possible option to avoid your people going to war. So I couldn't believe it when I saw that. Well, there are stories out there today that says EU is analyzing a Russia ban from the SWIFT payment system. This is in Reuters dated today. I'm going to spare you going through this whole article, but it looks like today in Germany and in Italy, both countries have signaled willingness to kick Russia out of the SWIFT systems, which means it's really the U.S. that is the thorn in the side of taking any nonviolent action against the Russians to try to calm this thing down. Right? And look, I know some people are saying kicking Russia out of the SWIFT system could be viewed as an escalation. Yes, it could, but you know what else it's going to do? Is it's going to put economic pressure on Vladimir Putin from behind, because right now Vladimir Putin has some public support, but you know what? There's a lot of anti-war protests going on in Russia right now. There was a professional Russian tennis player who, after a win today, took out a marker and walked up to a camera and wrote, "No war, please," on the camera. That is a professional Russian tennis player, right? So there is not universal support for this war in Russia. And right now, sanctions like this, like kicking Russia out of the SWIFT system, will be immensely painful for powerful people in Russia, people who right now have Vladimir Putin's back. Well, when you rule through fear, you need to be careful. And Vladimir Putin is definitely a rule through fear kind of guy. Note to self, I need to read The Prince. It's been on my list for a long time. But combine the fact with we could be inflicting a lot of economic hardship on powerful people in Russia, and the fact that the war may not be going that well in Russia's favor, that could really, really weaken Vladimir Putin's position in Russia, and it could result in an end to this war. It could get him to back down. Vladimir Putin is undefeated right now. Okay, understand that. He's undefeated. Since he's been in charge in Russia, he's taken Crimea. He's now taken other parts of Ukraine. He's taken South Ossetia. He invaded Georgia, right? He's won. He's never had a loss. All right? So Vladimir Putin right now is very much emboldened because he's never lost. There's nothing holding him back. Well, if we inflict some economic pain from behind him and he's got to worry about support back home, he can stop his expansion to the west. That's really the only thing that could slow him down right now, short of bullets flying. All right, and we took that off the table yesterday because I guess we'd rather risk more bullets flying than we would pop our asset bubble. All right, okay, so that's yesterday, and that's why I think the SWIFT thing is going to happen. All right, because right now, what's going on in Kyiv? All right, we're on the brink of door-to-door fighting in a major metropolitan area between a superpower and a large population. Right, and people in Kyiv right now are posting pictures of civilians making Molotov cocktails and of rifles being passed out. All right, understand the Russian technical advantage goes away in door-to-door fighting, right? Because door-to-door fighting, there could be an anti-tank missile behind every window. There could be a Stinger missile on every rooftop, right? Your technical advantage is muted in house-to-house fighting. It's hell on earth for both sides. So then it becomes a war of attrition. Right? How much cost are the Russians willing to take? How much stomach for hell on earth do the people of Ukraine have? It kind of becomes a morale war at that point. A morale war, right? Coincidentally, that's one reason why you have to question everything you're seeing online right now, because the propaganda machines on both sides are running rampant. So before you retweet something, make sure it's not a clip of a video game or something like that, because I'm seeing a lot of garbage like that going on Twitter right now. I see people holding up pictures of bullets saying, "This bullet hit my house." And it's clearly a bullet that's never been fired because the tip is not mushroomed at all. The projectile has clearly never been fired, and you can see the marks that the pliers made when they pried the bullet out of the shell casing to put it in her hand. Like it's clearly propaganda nonsense, right? It's going on both sides. Anyway, so when Russia gets pulled out of the SWIFT system, and why I think this could result in some serious stagflationary mayhem. First of all, here, let's talk about why it's not going to happen right away, okay? And this is the reverse repos, okay? Let me just say that we are still a long ways from a credit crisis because according to the reverse repos, there is still $1.6 trillion in extra liquidity in our banking system, all right? This is our cushion. This is our financial armor against the banking crisis. This needs to be soaked up, chipped away, it needs to go away before we can get a liquidity crisis or a credit crisis, all right? Right now, we've got all of this extra cash, and it's not going down yet. It's stopped growing because the taper is happening, right? The Fed is printing less money, and yes, they are printing less money. We'll cover that in a little bit. But when the taper stops, I think this is going to start drying up. And when the rate hikes start coming in, this is going to start drying up. I don't know how fast it's going to start drying up, but it will start drying up. And we can't get a credit crisis until this goes away. Because a credit crisis is no liquidity. And we have extra liquidity right now. This is extra money in the banking system that the banks are parking at the Federal Reserve in exchange for borrowing U.S. Treasuries. All right, and there's $1.6 trillion of that. That is a huge amount of money. All right, so this situation I'm describing right now, this is not going to happen this week. It's not going to happen next week. It's going to take time. All right. Also, while we're on the subject, I want to throw it out there because I get asked a lot. Here is the MMMRI, the Modified Mannarino Market Risk Indicator. It's at 148. It's still in the moderate risk area. It's on the brink of high risk. All right. And here is Mannarino's original formula, the MMRI. It's only at 118, all right? It's still in the moderate risk area, the lower bound of it, all right? So both of these indicators are suggesting we're not yet in a high-risk environment, all right? So I want to stress that this is still a ways off. All right. This is the Phillips curve that we're looking at right now. My evil Keynesian twin just loves his Phillips curve, okay? This is the mathematical representation of Keynesian economics and why they say you can't have inflation and unemployment at the same time, that it's one or the other. right? And the logic being, as the unemployment rate goes down, people make more money, and when people make more money, they spend more money. Well, that drives prices up, all right, which pulls you back on the curve, and the inflation rate starts to go up. And as the inflation rate goes up, people start to lose jobs, all right? There's this one or the other scenario that the Keynesians have where you can't have high unemployment and you can't have high inflation, that it's one or the other, right? And that's because the saying goes, the solution to higher prices is higher prices. When prices go up, there's demand destruction. And when there's demand destruction, companies lose business, people get laid off, all right? And then they become unemployed and they don't have money to spend anymore. That brings prices back down. It pushes you the other direction in the Phillips curve. Well, what the Phillips curve doesn't account for is two things that's going on in the world right now. Two things that could lead to stagflation, which stagflation is high inflation and high unemployment, or low economic growth, or even recession, all right? Because right now we've got war going on, and war is immeasurably destructive, all right? When you have war going on, you get supply destruction, all right? And we also have this supply chain problem because we have the globalist economy is breaking down right now, right? So that is causing supply destruction. So when you have supply destruction, high inflation doesn't necessarily kill higher prices, right? Because you still have supply going down. So even though people can't really afford the higher prices, the supply is also going down, so it doesn't force prices to go back down. And that's how you get stagflation. That's how you get high unemployment and high inflation at the same time. That's what we had in the 70s, right? Because yes, we had higher gas prices that caused a lot of demand destruction. People weren't driving as much, but because of the oil embargo, there was less oil. There was supply destruction to offset that demand destruction, so the prices didn't come back down. And that's why the stagflation of the 1970s happened, and that's why Keynesian economics failed in the 1970s, and it's going to fail again. All right? Which brings us to today. All right? Inevitably, Russia is going to be kicked off of the SWIFT system. It is inevitable, I think, because you have universal public support for kicking the Russians off the SWIFT system right now. It's almost universal. It's going to happen. All right? And if it hasn't happened already, wait till that house-to-house fighting starts in Kyiv. Wait until Twitter is overrun with pictures and videos of dead civilians, all right? Folks, it's going to happen. They're going to kick them off of the SWIFT system. It has to happen. I mean, nobody will be able to defend it. No politician will stand up once this mayhem and this carnage really starts. Nobody's going to be willing to stand in front of that decision. So then you're going to get the Russian oil and the Russian gas is taken out of the equation because the Western powers are no longer able to pay for it, at least not directly, all right? Maybe through black market, you'll get some trade, but Europe won't be able to buy that Russian gas, and the U.S. won't be able to buy that Russian oil. That means higher energy prices worldwide. All right, that means higher inflation. All right, so you are going to get a lot of supply destruction when Russia gets kicked off the SWIFT system. Now, there's two other variables in there, two other geopolitical variables. There's China, right? Russia and China have this little SWIFT alternative that they've built together. What happens if China decides they want to get involved in some kind of an embargo? Remember, China is the world's factory, right? So China controls supply of a lot of finished goods. What if China starts restricting supply? There goes your prices even higher more. There goes your supply destruction. What about Iran? What about the Strait of Hormuz? Do they get involved? Do they cause even more supply destruction if they shut down the Strait of Hormuz? Again, even higher prices. All right, so there's some geopolitical risk. Also keep in mind, and CS, you called me out on this in the comments earlier, if we get higher energy prices, the food and the fertilizer situation, which I have covered at great length on this channel, that gets worse. All right, so this war is going to be very inflationary. It's going to be very, very inflationary. And the SWIFT system is going to cause it. Now, when those prices go up, it's going to cause some demand destruction. People are going to start consuming less. But that's not going to be a solution to those higher prices, because even as people consume less, the reduction in supply is going to offset that destruction of demand, so the prices will stay higher. All right, now On top of that, all right, on top of this inflation and this supply destruction, we've also got the makings of a credit crisis going on right now in the world. And I want to emphasize that this credit crisis is not going to happen right away. All right, it's going to take time. I showed you that chart with the reverse repos. But Economic Ninja did a video today, and it's where I got the idea for the hashtag perfect storm. When this stream is over, go check out Economic Ninja's video because it was excellent about how these higher rates are already starting to kill the mortgage market. All right, the average mortgage has gone from, about just under 3% to over 4% in the last couple of months. That means the borrowing cost or the interest of your mortgage payment, if you're taking out a new mortgage, has gone up by 50% in a month. That is a huge shot at the housing market. All right, that means mortgage applications are going to fall off a cliff, and they're already starting to go down. And wait until the next round of numbers come out, they're going to go way down. All right, so you've got your mortgage is now getting more expensive because the interest expense on your mortgage is going up. Now people whose houses are underwater, people who say they've lost their jobs, or people who no longer have extra discretionary income or discretionary spending or no disposable income because of fuel prices have gone up, because food prices and energy prices have gone up, and gas and everything, right? Now they can't afford their house payment because the cost of living has gone up so much, but they can't refinance because the cost to borrow has gone up. All right, those people are going to start defaulting on their mortgages. All right, so that is going to start happening, folks. This inflation is killing people's extra income. And look at the raises, look at the growth in wages right now. It's not keeping up with inflation. All right, so this is a mathematical certainty. The cost of living goes up, people's wages don't go up, their standard of living comes down, and eventually that's going to hit their ability to make their mortgage payments, to make their rent payments. This is going to hit the housing market, right? I don't know how fast it's going to hit the housing market, but as it starts to hit the housing market and those defaults start to pile up, you're going to see that reverse repo is going to start going away. All right. And that, I think, is one of the reasons why the Federal Reserve is still not slowing down their mortgage-backed security purchases. We're going to shrink my big fat melon of a head again. And I want to show you this one. First of all, this is the U.S. Treasuries that have been held. All right. This is the Fed's balance sheet. This is on the St. Louis Fed website. Highly recommend this website. There's great data here. This is the amount of treasuries held by the Federal Reserve. And you notice this trend is leveling off. This is the taper, folks. The taper is happening. The Federal Reserve is buying less U.S. treasuries. Right now, the curve is almost flat. That means very soon, within a month or so, they will be buying 0 U.S. treasuries. It's one of the reasons why interest rates have been climbing. But look at mortgage-backed securities. The chart on mortgage-backed securities has not leveled off yet. The Fed is still buying all of the mortgage-backed securities they've been buying all along. The Fed is still propping up the housing market. And I did a video with Economic Ninja on this last week, that the Fed saw something in the data that scared them, and that's why they're not rolling back their purchases of mortgage-backed securities yet. This inflation problem is, in my opinion, already starting to hit the mortgage market. It's already starting to hit the housing market, and that's why the Fed has not slowed down their mortgage-backed securities purchases. All right. Now, again, I don't have any other hard data to back that up. I don't have information on foreclosure rates or anything like that. I'm just seeing the actions that the Fed is taking versus some of the language that they're using tells me the Fed is scared that they see something in the housing market. And if you take a step back and you just think about average monthly budgets, it makes sense. If people's food and gasoline and everything else is getting more expensive, that means it's getting harder for them to make their mortgage payment every month. Now think about the aggregate effect of that on the rest of the economy. Are people going to take vacations? If they can barely afford to make their rent and buy food, they're not going to go on vacation. They're not going to eat out at restaurants. They're not going to buy fancy clothes. That means all the companies that deal in those things, hospitality, transportation, retail, they're going to see less earnings. That means less economic activity. That means they're going to lay off workers. All right, so now you can start to see how we're getting into credit crisis territory now, and how we're getting into low economic growth or even recession. right? Because the higher prices is putting people out of business. And yet, because all the demand destruction from the war and from the geopolitical issues and from the supply chain, which has still not recovered, the supply destruction is offsetting the demand destruction, so the prices are staying high. Folks, this is a stagflation perfect storm that is brewing right now, and this war in Eastern Europe fits right into it. And unfortunately, the only way to prevent this war from getting worse, this is my opinion here, is to kick Russia out of the SWIFT system. And if we do that, we make this stagflation problem worse. And in my opinion, that's the right thing to do, because you know what? A stagflationary perfect storm economically is immeasurably preferable to going to war. It is. There's not even a question. There's no contest. It's the right choice with all the pain and everything that it means, because what I'm talking about economically here is a really tough way to live, folks. It's not going to be easy for anybody. But the alternative is unrestricted global war, World War III. There's no easy way out of this. And this conflict in Russia, I just see fits right into this situation and could make it a whole heck of a lot worse. So there is my perfect storm scenario. And again, I want to send a shout out to the Economic Ninja for planting the seed of the idea. Notice that's the Wi-Fi password today. Hashtag perfect storm, because I see this happening. I see the housing market. I see the national debt. I see the MMRI and the MMRI, all that calculation. I see the inflation problem, the food problem, the fertilizer problem, the geopolitical risk. I see all of these things coming together, and it's a mess. It's a mess. And I don't think there's any easy way out of this. I don't think there's this one policy decision that we can make, and it's going to set everything right, and all of these problems are going to go away. I don't see an easy way out of this, folks. Robin RC Models, thank you again for the super chat. Just today, heard a Canadian on a podcast, mortgage 5% down, 2% interest, and prices are in the millions. Recession, stagflation, ghost of '08. 5% down on houses in the millions. That's not good. And, they're doing that in China, too, by the way. I mean, somebody mentioned in my post earlier, that they wanted an Evergrande update. I know I haven't kept up with the Evergrande story, at least not outwardly on the channel like I used to. But they're lowering down payment requirements over in China also, Mike. You're starting to see they're starting to ease. You're starting to see a lot of nationalization in China. So, yeah, exactly what you just described in Canada. It's happening overseas. It's happening in China also. And when they start loosening like that, that means they're stressed. That means they're trying to keep things going a little bit longer. It's not a good sign. And thank you again, sir, for the support of the channel and for everything you do to help out this channel. So there you have it, folks. There is my thesis in my stagflationary nightmare scenario. Wouldn't mind being wrong about that one. Again, I know I tend to get a little fuddy, folks. I know I tend to be a little bit of a perma-bear. But FFS, give me some good news, and I will happily share it with y'all. Who's got some good news? Anything good happening? Anyone? No? Anybody save a bunch of money on their car insurance or anything like that? I'll take what I can get. All right. Real quick, I want to just show you this thing. I really didn't like this story when I saw it. Let me refresh the window in case the price has moved. It has not. This is Dutch TTF gas, and I've mentioned that whatever happened in Eastern Europe was going to show here. It was up 51% yesterday, and then the news broke that the Russians weren't getting kicked out of SWIFT, and look, it's down 30%, almost 30% today. And this was the weak sauce Western response to the outbreak of war. The natural gas prices came right back down. The Western leaders chose cheap energy and their asset bubble and their stock markets over, in my opinion, doing what's right and protecting their people from an escalation in this war. So I just thought I would share that one. Again, you can give press conferences and you can congratulate yourself for fighting climate change, and then you can congratulate yourself for checking Russian aggression, and then you can do nothing when war breaks out so you can keep buying Russian fossil fuels. Does that make sense? Way to fight climate change and fight Russian aggression by buying cheap fossil fuels from Russia. Western leaders destroy their own energy infrastructure, and then this happens. That's why energy is so important, folks. All right. I also want to show you this. Again, crude oil down 50 cents today. Looks like it's bouncing back a little bit into close. Again, I don't think this is going to keep up. And when I saw oil was down at the close yesterday, and then I saw it was set to open lower again today, I said, that's it. This market has lost its mind. This is not sustainable. And I bought more calls in ERX, and that is a leveraged oil stock ETF. And I also hold a position in XLE, which is a similar ETF. They have a lot of similar holdings. And the XLE position I took out is still in the green, but my ERX position is now lost money, but I'm holding that one because I don't think this is going to last. Again, I think the Russians being booted from the SWIFT system is inevitable. Unless one side surrenders, the Russians retreat, or if Ukraine just outright surrenders before the fighting gets worse, oil's got to go much, much higher here. I mean, short of a very sudden end to this war, which I don't see any way this war suddenly ends like that, because the Ukrainians seem like they're digging in for the long haul, and the Russians have historically been willing to take tremendous losses to achieve victory. I don't see either side backing down anytime soon. All right, somebody mentioned corn in the comments here. I also added to my position in the corn ETF today. And let's real quick look at this. Let's close this stupid ad. Thank you very much. Corn down big today. Let's look at a 1-month chart. Looks like it's right around support here. This is was it around 650 was a previous resistance level. And it looks like it might be catching a bid at that level. And I also bought up the corn ETF because I wanted to show you the RSI on the corn ETF. Let's make sure you guys can see here. Let's move my big fat melon over here. And it looks like, just from a technical standpoint, I mean, the RSI yesterday with that big jump in corn prices, it broke above 70. And if you look, the RSI on this corn ETF, anytime we get that overbought, we've had a little bit of a price correction. So technically, I guess I should have seen this one coming. I probably should have taken some profits yesterday when I saw this. So that's on me that I didn't take any profits. But when I saw the RSI came back down into the low 50s and everything going on, and in my opinion, the inevitability of the Russians being kicked out of SWIFT, I said this one is a gift. So I actually added to my position this morning in the corn ETF. And I've also been talking a lot about LNG. This is Cheniere Energy. This is the U.S. liquefied natural gas company. And again, big move yesterday. It came back down, but this one is hovering right around that $130 price target I have for LNG. I'm on the fence. I may take some profits in this one if it moves back into the low 130s. But again, if the Russians get kicked out of SWIFT, it's going to bring those natural gas prices so much higher. And I just can't see. I can't see any scenario where we do not kick the Russians out of SWIFT. Talk some sense into me, folks. Am I wrong here? What am I not seeing? Are they going to leave them in SWIFT? Are they really going to do nothing? I mean, with almost universal public condemnation yesterday that we didn't kick the Russians out of SWIFT. Do you think this is going to continue? I don't know. All right, let's see what we've got going on in the comments here. Hello, everybody. I has 451 credit says he added to corn also around noon. All right, so we will we'll take that one together. 451. Hope that works out for you. Again, I am optimistic about corn. JP asked vaccinated. That's let's meet up at the corner of Nunya and Mind Your Own, and we can talk all about that. The Voice of Ireland says Calvin, how very good. I didn't see that one. I'm sorry. Vladimir Putin. That's a new one. Okay. What else we have here? Yesterday morning when I watched precious metals rise, palladium shot up over $200 compared to gold around $60. Any thoughts on that? Palladium is interesting. You know, I can't comment on palladium specifically because I just don't follow it that closely, Janine. But the whole platinum group metals, the PGMs, okay, I'm bullish on PGMs for a number of reasons, but mainly, and that ties into this food situation also, because the biggest source of PGM metals in the world is South Africa. All right. And particularly platinum in South Africa, but also a lot of palladium comes out of South Africa. All right. And last year, we already had widespread civil unrest in South Africa. And now we've got food prices are moving significantly higher. And when you've already got a situation with a lot of civil and social anxiety, and then you add more expensive food and starvation on top of that, that's a tinderbox. I think South Africa is a tinderbox. I think the whole world is a tinderbox right now. But countries that have already had social and civil unrest recently, I think they're bound to have it again. And if that hits in South Africa, you're going to see the whole PGM metals group is going to go much, much higher. Now, the counterbalance to that is we've still got this chip shortage going on, and the chip shortage is killing the auto market. Well, one of the biggest uses of platinum and palladium is in catalytic converters. All right, so if there's no chips, there's no new cars. If there's no new cars, there's no new catalytic converters getting made. So that is a headwind for platinum and palladium. All right, and I just don't follow the PGM metals as closely as I do gold and silver, so I can't really comment beyond that. But I did notice that big move in palladium yesterday, Janine. I did see that one. Also, since we're talking about precious metals, let's bring up that silver chart, because, man, I'd love to FOMO into silver. I'm probably going to buy a little bit more physical silver. But yesterday when we had that big move up, let's make sure you guys can see. You can. Yesterday we had that big move up. When we were up here, I said, I want to see a back test. I wanted to FOMO in. You know me. I get out my pom-poms and I'm a cheerleader for silver. I'd love to see it. But what did we get? We got another price smash. And then, who could have seen that big reversal yesterday coming? Again, I talked about the possibility of that reversal yesterday in my live stream, but I also said I didn't think it was going to happen. Well, it happened. So I guess mea culpa there. But, we broke down and we've been watching this 200-day moving average. We talked about that back here, and I said I wanted to see a break above and a retest, and well, that failed, and we went all the way back down into the 22s. And then I had Brian Zarb on the channel a couple of weeks ago. We talked about how that 200-day moving average was a big one, that we had to break above it. We broke above it, and it looked like we were off to the races. I said, no, I want to see that retest. Retest happened, and it failed. And here we are, below the 200-day moving average right now, folks. So, I know we drew this channel here, this flag pattern, but I think the 200-day line is really more of a resistance. And right now, we're still in this consolidation period. Until we get a successful move above and back test of this 200 line, I'm not going to make any kind of a leveraged trade involving silver. I'm not going to go after any new miners or anything like that. Again, I'm always dollar cost averaging into physical silver as a hedge against inflation. I do that regularly. I also do that with Bitcoin and gold and Ethereum. But I don't watch price. I don't try to time markets. That's an inflation hedge. I make small, regular deposits in those areas. What I'm talking about here is making like a leveraged trade, like a silver miner stock or a silver miners ETF, something like that. I'm not going to do that until I see a move above this 200-day line and a successful backtest. We still haven't got it. This is now 2 moves. This is 2 straight attempts in as many months to break above this line that have now failed. All right, and the shorts are not going to go quietly into the night. You've got a lot of powerful interests who are incentivized to keep silver prices lower. All right, and they've been doing it for years. They've gotten away with it. The regulators allow it. So it's going to take more than that to get them to give up. All right, I lost my shirt last year making highly leveraged bets on silver when it looked like Silver Squeeze was finally going to break the bullion banks. Well, that didn't work out so well, did it? So got to watch those technical levels, folks. I know it's tempting to FOMO in. God knows I want to, but I just couldn't do it. All right, it is now 3:59. The market is about to close. Let's see what we got. Is this market coming to its senses? Nope. No, it is not. The S&P is up 2.25%. Onward and upward. Let's go make some new highs. World War III is starting. Everybody buy the dip, I guess. Kathy Wood was right. That's it. I quit. Just kidding. I don't quit. Dow up 834 points. 2.5%. NASDAQ up 1.6%, 220 points. Oil down 53 cents. Gold down 34 bucks almost. Silver down 42 cents. 10-year yield pretty much flat for the day, although it did have a little bit of movement. And I want off this planet. Again, what we saw, this move in markets yesterday and this big move up in the Dow today, folks, unfortunately, this is every disgusting human behavioral quality on full display. This is war, this is greed, this is indifference to human suffering. That's all of it on full display in one chart. That's what this tells me. So, not that I'm like rooting against stock markets or anything, but market needs down days, and the outbreak of World War III seems like a pretty good time to have a down day. Hey, I just throw them out there. You guys do what you want with them. I just throw them out there. Ryan Everywhere says Bitcoin rally this weekend. Bitcoin, for the time being, is going to track the stock market. All right, Bitcoin is now a risk-on asset. All right, it's stocks go up, Bitcoin goes up. Stocks go down, Bitcoin goes down. So Bitcoin rallied today along with the stock market. If Russia gets kicked out of the SWIFT system, my personal opinion is Bitcoin's going to sell off. But there's the little asterisk there that the Russians may somehow try to sell their oil and gas for cryptocurrency. I don't know how that works. I don't know how that would work out for them. But, that's kind of like a dark horse in that race, that Bitcoin may indirectly benefit from Russia being kicked out of the SWIFT system. I've read that online. I can see how that would play out. But I just don't know. I just don't know how that would work. And I also know Russia has been trying to ban cryptocurrency for a while, that they've been pushing for that. So not sure that's going to happen. Also, folks, I just want to remind you, if you could, subscribe to my channel if you're new here and give me a thumbs up for this video. Help the algo get that word out there. It would really help me out, and I'd appreciate it. Also, I want to mention that I'm going to be in Dallas, Fort Worth next weekend, starting on is it next weekend? Yeah. Nope, we're still a few days away. Next Friday, I'm heading out there for the Speak Freely Ninja Nation event with the Economic Ninja and with Joe Brown from Heresy Financial. And in the age of censorship and all the things that will get you booted from tech, from your big tech platforms, we will be able to say all of those things that we can't say on YouTube at that event. I will post a link in the comments as soon as I'm done here. I meant to put that in the description, and I forgot to do that before we started here, but there's only a few spots left. The VIP event the night before is sold out, but there are still some spots left for the main event. I hope to see some of you folks there. And, it is now 4 o'clock. We've been going for about 45 minutes. I think that's probably a good place to wrap it up. I want to thank you guys for listening to me. Thank you for putting up with me on my soapbox. And until next time, live small and dream big.